Okay, it looks like we've got a great group here, so let's just go ahead and jump right in. Thank you so much for spending part of your day with us, everybody. We really appreciate it. Today, we're going to be talking about preparing your taxes for 2025 for your business. But honestly, this is more about than just taxes. It's about helping you feel confident, organized, and supported as a business owner so nothing sneaks up on you later. All right. Today's presentation is hosted by Company Sage and our family of brands in partnership with Lily. We work with small business owners every single day, and our focus is pretty simple: make it easier to start managing and growing your business without a bunch of unnecessary stress. And one of the things that we hear from our customers is that taxes and compliance can feel really overwhelming. You're busy running your business, serving your customers, making payroll, and then there's deadlines, paperwork, and rules that aren't always very clear. Knowing what's due, when it's due, and how to stay organized can feel pretty confusing. And when things aren't clear, important stuff can slip through the cracks. And that's why we exist, really. We're not just here to help you form a business and move on. We support you through your entire journey from formation to compliance to staying organized all year long. And that's what we mean when you hear us talk about our business success platform: support that goes beyond simple setup and helps you stay on track all year long. And it's a big part of making sure that you have access to trusted expertise, which is what brings us here today. A quick intro on me. I'm Jeff Cummings, COO here at Company Sage. I've spent the last 30 years focused on customer experience and operation. And the last few years here have honestly been some of the most rewarding of my career. I really care about helping business owners feel supported, not confused, and that's a big reason why sessions like this really matter. Here's how today's session is going to work, just to run you through it. We're going to hear from a CPA who works closely with business owners and understands the real world questions that come up around taxes. He'll walk you through what you should be thinking about now for 2025's filings, what to stay on top of throughout the year, and how to avoid surprises when the tax season rolls around. And before we hand it over to him, I just want to really quickly introduce our partner, Lily. Lily is an online business banking platform built specifically for business owners. And what we like about Lily is that it helps you manage your business finances day to day, keeping things organized, separating personal and business money, and giving you better visibility into your cash flow. And as you'll hear today, good tax outcomes usually start with good financial habits. And we'll come back to Lily, but keep it in the back of your mind here as we go. And before we get started, let's just do few quick housekeeping items. If you missed something or you want to go back and rewatch a section or Jeff talked too fast, don't worry. We'll be sending out the recording later this week. And make sure you stick around till the end because we'll be sharing a special discount code for anyone who's thinking about forming a business. We'll also save time at the end for live Q&A, so feel free to drop your questions in as we go. And in the meantime, we'll be running a few quick polls. Your answers stay private and just help us to guide the conversation. And with that, I'm super excited to introduce our guest speaker, Kendale King, CPA. Kendale works closely with business owners and helps them navigate in a very practical, no-nonsense way. Kendale, I'll let you share a little bit about your background and then we can dive in.
Appreciate it. Thank you for having me. Like this really cool looking slide shows. I'm a CPA originally from Cleveland, Ohio, but I currently am in Los Angeles. And if you know Los Angeles, more specifically Redondo Beach, and I've had corporate experience working for the big four companies in accounting like Deloitte, PwC, but also have done other things specifically in the entertainment space like Netflix and ITV Studios. I have my own firm now where I service those who are looking to get smarter financial decisions. So not just selling the bookkeeping or the taxes or anything like that, but really people who need help making better decisions. They're making a decent amount of money, but aren't really seeing it in their bank account. It's not really reflecting, or they want to save on taxes. So tax planning, and helping them grow. I work a lot with content creators, entertainers, production companies, and stuff like that too, and crypto, just because I think it's fun. So yes, that's about me. We can get into our next slide.
All
That's
right,
the first
everyone,
one.
before we go too far, let's get you involved here as well, and we'll do a really quick poll so we can get to know the room a little bit better. The first poll question is how would you rate your knowledge of small business taxes? No wrong answers here. We're just helping us to tailor the conversation.
Yeah. Because if it's everybody's advanced, then we're gonna have to start talking about some other stuff.
Yeah, we might have to have him join the video
Yeah,
next time, huh? Have him join the webinar and take some questions. Wow,
exactly.
we've got a bunch, quite a few people here that are beginner. We got some intermediates and a few advances as well. So that's fantastic. That's really great to know. It'll help us just as we talk through the conversation to help understand which are the items that are most important to cover. All right, Kendale, off to you again.
All right. So the goal of the session at the end of the day is to get you a great start on your 2025 tax season. And so we're going to be talking about the documents you'll need, overall tax responsibilities, going into business expenses and deductions, how to file and understanding certain tax forms that you can have, and how specifically also throughout how Lily can help as well, just like the banking platform, and then how Company Sage helps with you and your business as a whole. And so we'll move on to our next slide, which is the fact that we have done like a lot of I think this is actually specifically from Lily, but there's a AI that they use where they kind of take a lot of the questions from their clients, and a lot of the people there, 52% of small business owners are asking questions around taxes. And so that's why it just makes it really more important that we do things like this to make sure that we're giving you all as much information as possible and relevant information as well. And so that's why you'll see all the different types of questions that are asked here. And honestly, most, if not all of these are going to be answered, by the conclusion of this presentation. So where do I start? That's a big question for a lot of people. Because some people are like, hey, I didn't make any money. Do I got to file taxes? Or anything like that. And so honestly, no, you don't technically have to. So as far as where your threshold is, if you are a single person, the threshold is like 15,750. However, if you're self-employed, that threshold is a lot lower. It's like $400 because you are going to be subject to some level of tax. However, my recommendation is that you file your taxes regardless if you have a profit or a loss. And the reason is it only helps you. So if you have a profit and you have money, it helps you stay out of jail and helps you and helps you get away from penalties and everything like that. But if you have a loss, it helps you because you can, make sure to suspend those losses and carry it forward whenever you do have a profit. And so in every instance, it's always good to do your taxes, because if you don't do your taxes in the year you have a loss, you won't be able to take that amount and apply it to a future year's, profit. So it's really important that you do it every year. And I'm not doing this because I work for the IRS. I'm just telling you, it actually works in your benefit to actually file your taxes, especially when you have a loss. But then we also wanted to identify, because I get this quite a bit with clients, that um, there's more than just the income tax, right? And I'm sure we all know this, but understand that during tax season and tax time, that's what we're really talking about is income tax. But there's other tax responsibilities, such as your federal income tax that you have to pay, obviously annually. But of that federal income tax throughout the year, specifically as a self-employed individual, you have to pay what's called a quarterly estimated tax. It's the same, it's contributing to the same overall federal income tax, but you're doing it 4 times throughout the year so that the IRS gets their money. As a W-2 professional, you have your company who takes your money out for you, your withholdings. But as a self-employed individual, you don't have anybody doing that. So you have to do it. And that's where the quarterly estimated taxes are for. And so you estimate how much you're going to make, for the year. And then you have to obviously cut up, 25% in the first quarter, the next 25%, so on and so forth. If you have employees, so if you have an S-Corp or C-Corp or LLC and you hire people and that you have an employee, then you also have to pay employment taxes. So this is important as well. That's technically another tax that you have to, be responsible for, and that's not in the tax season. Then you have state income tax, which again, it's different depending on what state you're in, but it's a separate income tax. And a lot of people don't think about that as well when they're thinking about, tax season, but these two do coincide. Then you have franchise tax. So your franchise tax is just a separate state like fee for you to even like have the privilege of doing business in that particular state. For example, in California, they charge $800 flat fee, and then it scales up depending on how much revenue you have. So that's a separate tax, separate process, and more times than not, when you're engaging a tax preparer, they're not handling your franchise tax for you. They're just doing your federal income tax or your state income tax. So it's important to understand that as well, and ask them to actually do that as well. And then you have your sales tax if you're selling products, or if you have a service that is subject to sales tax. And that's a year round, all the time thing, monthly, filing, quarterly filing, depending on how much you sell. So all of that is, very, very important responsibilities you need to think about when you're, going forward. So just wanted to lay all that out. We're going to talk about all of it. We're going to go really into depth on the income tax portion, but we wanted to let you guys know, like, there's a lot of tax responsibilities out there. Sorry, I didn't make the rules. I'm just helping you figure them out. All right. So first step, what do you need? So when you have a business, your income statement, your profit and loss statement, if you're, putting those together, obviously those business expenses should be included in those statements, your balance sheet, payroll documents, if you have an employee, business asset information, bank and credit card statements. So things that are all the possible ways that you can, put money and spend money, or earn money. You need all of that. It's also great to have your last year's tax return as a start so that you can properly carry that information over. And then your taxpayer ID number, as well, if you have an EIN or if you just use your social security number. So these are your base documents that you would need to start. All right. Moving into deductions. Everybody's favorite conversation literally is, what can I deduct? What can I, take out? And so what are deductions in the grand scheme of things? So I think some people sometimes misinterpret this. So your deductions are your actual business expenses. Anything that you're doing that is ordinary and necessary in your line of work, those are expenses. Now, there are certain rules, IRS rules out there in previous law cases and stuff that even if you think it's a deduction, tells you that it's not a deduction. Even if, hey, I need a haircut to, do proper in business, there are statutes out there that literally state that a haircut is inherently personal and all that good stuff, right? So it's a whole lot of different nuances sometimes when you think, but overall, if it's ordinary necessary to your business to in the pursuit of income, then that's that qualifies as the deduction of business expense. So we're going to go into our next slide where we lay out quite a few of them.
I guess I need a haircut, and now I can't write that off, is what it sounds like. Okay.
That's absolutely what it sounds like.
Note to self.
Yeah. And so with that, and now haircut is one piece. You have these other things where you can, the laptop, your hardware, software, office supplies, pens, paper, stuff like that, printers, subscriptions and dues. A lot of times in this day and age, we got a lot of subscriptions that we're, spending. All those are all expenses that you can deduct. Your marketing expenses, utilities, your meetings with clients, training, business trips, car mileage, home office space. So we can get into these. We're going to get into car mileage and home office space in the next couple of slides, but these are all expensive. Startup costs, as well, are things that you can, take advantage of when you're, forming your LLC.
So, Kendale, if you don't mind me asking, because we do get that question a lot from customers,
Yeah.
if someone is forming their business, so the formation fees are deductible, and does that include the state fees as well, or just the formation fees that they would give to, let's say, LLC attorney, for instance.
Yeah. So th yes, all of those fees are deductible. There is certain rules, like when you're doing startup costs. Essentially, with startup costs is like anything that you are paying for before you actually start operating your business is what's called a startup cost. Those are limited to $5,000 in that first year, and then you can, amortize it going forward. But basically, the anything and everything to set up your business is an expense that you can actually deduct.
Oh, that's
Uh,
fantastic.
yeah, again, ordinary necessary. So
Not haircuts.
not haircuts, unfortunately. Now there might be some instances in where, getting a specific service on set on like again, that really depends on what you're doing, but it's so things that are so inherently personal. There are specific rules and statutes that speak against you being able to do certain things. So there's always it depends, as the answer. So I want to just make sure I state that. I don't want to totally cut off people's like, hopes and dreams. But honestly, if it's really inherently personal, then, usually you would have the burden of proving that it is actually ordinary necessary. But home office deduction, speaking of something that maybe is a little bit more complicated because it is a little close to home. Dun, 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 tss. Um, so if in your home office deduction, what it means is that if you have a place in your home that is used for work and exclusively used for work, so in this example, you can't use your dining room table, that you then use to eat at, and then play games at, and everything like that, right? You have to use it exclusively for business. So for example, for me, I'm right now in my garage. I only use this garage for business purposes. And so everything is in here is like literally, my setup to operate. And so what I can do is there's two ways that you can, calculate your deduction. The first way, the easy way, is just determining how much your square footage is for the space and multiplying that by $5. And it is capped at 300 square feet. So if this place was 300 square feet, the most that I can get for a deduction if I use the simplified method is $1,500 as a deduction. Go ahead.
Yeah, just a question like what about things like do I get to write off a portion of my electricity bill? Do I get a if I'm using high speed internet, things like that. Does that stuff fall into the $1,500 or is that kind of something separate? I mean, I know you're speaking in generalities, but are those
Yeah.
other things like deductible as well?
Yeah, so you would have to do that during with using the actual expense method. So the simplify is IRS is giving you a number and multiply that by your square footage. But the actual expense method is where you're taking, hey, if my thing is actually 300 square feet, and my total home is, I'm making this up, but 3,000 just because it's a nice little cut. I wish I had a 3,000 square foot home. But if it's 300 over 3,000, then it's essentially saying you can get 10% of all of the costs that are used to upkeep your home. So your rent, if you have a mortgage, the insurance that you're paying, the electricity, the utilities, all of the stuff that is shared for the whole house, you can get a 10%, amount to be considered, I guess, as a deduction. Obviously,
Wow, that
more
adds
times
up.
than yeah, more times than not, that's the bigger deduction for sure. And that's always my recommendation is do what's going to get you the bigger deduction. Um, and those are just the costs that are shared across, all of them. There could be costs that you specifically have in your space. So for example, here I like did paint. I painted these walls. So the paint related to me painting these walls are deductible directly from into this business. If I had a separate say electricity, line only in here, then I would get 100% of the electricity that is spent here. So it just depends on if it's a direct or indirect cost. And you either get that percentage of 10% in this example, or you get 100% of it because it's fully related to business.
Oh wow, that's pretty amazing. I didn't even know that. That's cool.
Yeah. Yep, it adds up. And so similarly with the car mileage deduction, there's a lot of different, thoughts here too. Because most people just know that you can get 70 cents a mile. That's the rate in 2025. You get like a percentage or a mile, and you usually get that as a reimbursement sometimes. If you ever worked at a job and they were able to give you some reimbursements, they would say, "Oh, it's going to be reimbursed at the IRS, stated, percentage or mileage rate." So it's 70 cents per mile now. And again, that's kind of like the simplified method, right? It's like, hey, how many business miles you drove? Here's 70 cents per mile as a deduction. Now, there's an actual rate method, and so that's where we get a little bit more, interesting. And so in this actual rate method, again, you are going to look at all the costs that are used to upkeep your home. Sorry, home, your car. We just talked about the home. All the things that are used to upkeep your car. So your car payments, and we got to talk about that. I'm gonna separate those out separately. But your gas, your repairs, your car washes, stuff like that. All of that is again bundled up. And depending on the percentage of personal versus business use, you'll get that percentage applied to those amounts, which again, more times than not, is going to get you a higher deduction. In this example, it says that you drove 4,000 miles, during the year for business, and 10,000 in total. So in this case, is 4,000 over 10,000. So your car usage percentage would be 40%. And if you spent $10,000 on your car for, across all the different things that we talked about, then you would get a 40%, deduction for that. So $4,000 would directly go to, your tax return, which is more than 4,000 miles times 70 cents, so that's where, you can really see the power there. As it relates to your car payment, there's a thing called depreciation. So when you have an asset, like a car or a house, you depreciate that asset. So if you pay for your car for $40,000, more times than not, people are getting a car loan on that, right? They're making payments. So your payment, if it's $500 a month, that $500 isn't all just going to the base of your car, right? Some of that is interest. And so when you're doing your deduction for your taxes, you have to separate the component that relates to the car's like value the cost, sorry, the cost of the car versus how much is in interest. So the interest, you're going to get your percentage based off of, that, but then your actual car value, like the car cost of it, that's going to be depreciated based on, when it was put in service, the type of methods you use and everything like that. And then it's going to get hit with that percentage. So it's just a little bit more complicated and complex to get to that number. And then also there's other rules and the special deductions that you can take where you can potentially take all of that in the first year instead of having to spread depreciation over multiple years. But just depends on how you do it.
Does that include insurance as well? Your car
Yeah.
insurance? Does that
Yep.
qualify? Oh, wow. Okay.
Yeah. Includes insurance as well. Anything you can do that, yeah, keeps up your car. So yeah, so we just wanted to also like show you the value of the deductions. And more times than not, it's not like you have to make up deductions and everything, right? It's just literally just taking credit for what you've already spent money on because you need to spend money to make money, as they say. And and I think more times than not, I see people who aren't taking credit for the actual deductions that they've spent versus things that, oh, I need to come up with some deductions. It's like, no, you just need to find them, like, and actually have it accounted for properly to do that, and you'll see the difference. So in scenario A, if you have an income of profit of $120,000, so that's all your revenue, is 120 minus the business deductions. Your business deductions are $0, right? In this instance. So you would be taxed just in self-employment tax, which is roughly about 15.3%. So of that 120, hitting it with 15.3, you can see that you already be taxed $18,360 on that. Now, if you just took credit for the deductions you already spent money on and all already, outlaid that cash, let's just say it's 35,000, for scenario B, you can see how you'll save $5,355 just on taking credit for expenses you've already spent. And so I think that's a really powerful thing that most people don't understand. It's not too complicated. Don't have to try to find and make up expenses or anything, or like, let me go spend some money. Just really just taking stock of what you've already spent in order to be able to reduce your taxes effectively. So this is the big thing, and obviously like the very first start for um, figuring out how to calculate your taxes and tax plan. There's other things that you can do, such as credits and everything that we won't talk about in this section, but this all relates to like the business deductions. And in our next few, slides, we're going to talk about some other deductions that you can get as well that the IRS, provides. And so some of it's called above the line deductions and below the line deductions. So the above the line deductions are like your retirement contributions, student loan interest, health insurance premiums, and then 50% if you have that business, 50% of whatever the self-employment tax amount is. They allow you to kind of take that again off the top of your gross and your net profit at the end of the day. So these are some really important and easy above the line deductions. And when you think about how can I try to maximize my refund or maximize my tax, efficiency. It's about usually putting money into retirement. And you'll see some other ones for the below the line, which is like charity, which we'll talk about. If you went to school, you can get your student loan interest, your health insurance premium, stuff like that.
So, Kendale, I want to talk a little bit about the retirement contribution for a minute because this kind of trips a lot of people up.
Hmm.
If I'm a business owner and I'm contributing to my own IRA or 401k, can that reduce my taxable income even if like I'm the only owner? I know you and I talked about that before we joined here and you were like, I don't think that works the way that you think that it works. So, can you, at the high level, are you able to donate to your own retirement and call that above the line?
So yes, you can. I think the thing I really wanted to make sure to like lay out is the fact that you say donate and when you say contribute, like you're actually giving up money. Let's just be very clear. Like you're locking it away. You're locking it away for retirement, something that you can't technically use unless you're going to get hit with fees to use it. For however many years that you can see it. And all you're doing with retirement contributions depending on the account, is really just deferring the tax. It's not like getting rid of the tax. You're just deferring it. Now there's some accounts where the things can grow tax free after the fact, but if you're contributing to like a 401k, it's really just deferring how much you're going to be paying. You're just moving that money from this year into a later tax year where the idea is if you're thinking you're going to make less money later down the line, like in retirement, then it makes sense, to do it then. Or if you think that the tax rate is going to like increase or decrease, I should say, down the line, it makes sense to defer it to a different year. So it's a little bit more complicated, but yes, you can put money into it. Your own business can create a payment like a payment plan, like a contribution plan, like matching and all that good stuff, but you are still paying it. It's like it's different when you get matched at your corporate job, right? Because you don't own that business, so that's just extra money that they're giving you. But when you own your actual business, that match is just more money coming from your profit at the end of the day, that you are putting in the account, and it does help you reduce taxes, but it's not a one for one, dollar for dollar reduction of your tax. And so sometimes it makes sense, depending on the situation, to just pay the tax versus putting it in retirement or look for other ways to effectively reduce the tax burden.
And if I have employees, if I do any kind of a match or contribution, is that considered above the line if I'm putting it in for an employees outside of obviously myself?
Yeah, so if you're putting in for employees for your business, that's just an expense. That's just the deduction. So like in our previous slide, that's like payroll costs,
Oh, okay.
benefits and everything. So you'll get that, for sure. But your employees would then see, their like the money that they put in as, contributions.
This is why I have a CPA. Okay, awesome. Thank you.
Yep, no problem. And so just to make sure everybody's on the same page, we took our gross profit, we subtracted our deductions, our business deductions, and we got to net earnings. The net earnings minus those above the line deductions we just talked about equals your AGI, your adjusted gross income, which is an important number because when you get to credits and when you get to figure out some other calculations down the line. Usually, this AGI number is like that threshold number. That if this is too high, you start missing out on some of the other benefits you can get down the line. But if it's and it also helps you kind of set on where obviously reducing your taxes down, further. And so next poll.
All right, our next poll. What type of small business do you have or you're planning to start? If we put up some categories up here that doesn't match, you can just choose other. Oh, we've got a really good mix here. Quite a bit of professional services, as we're thinking about that, and we're talking here later on, Kendale, and real estate, and we've got some others, and ooh, we've got some
Okay.
creatives in there. I love that. Thanks, everybody.
Yeah, I work with consultants and professional services all the time, and then a lot of people who have real estate. It might not be like their main game, but they have real estate, and then creatives are like in the entertainment space is my thing. So that's good. So I'll try to like with some more examples. I'll try to use examples in those professions. All right, next slide. All right, so below the line deductions. So when we talked about your business deductions, we talked about the above the line deductions. Now we get below the line. So these are, probably the most famous types of deductions is your standard versus itemized, right? That's the question is, are you itemizing or not? No, no, no. So what does that actually mean? So not too different from the other home office and car mileage. There's a standard method, standard rate, a standard deduction. And then there's a way to do your actual expenses, which is your itemizing your deductions, right? So, here's how you can look at these two. A standard is literally just the IRS telling you, hey, here's how much you can automatically deduct this year. Don't have to calculate anything. Here you go. So single and married filing separately is 15,750. Married filing jointly is 31,000 500, and then head of household when you're not married, just you, but you have a dependent that you are claiming, and they give you a little bit more than just single. All right, and so that's the standard. So literally, you don't have to do anything, but just figure out what filing status you fall under, and then that's the amount that you get. Now, for itemized deductions, these only make sense for you only make sense for you to itemize when you are going to be able to get over how much you would just get in a standard deduction. So I'm married, right? So $31,500, we would have to have more itemized deductions above and beyond 31,500 for it to make sense to even itemize. And so that's the thoughts you need to consider. So what things go into itemize? The biggest ones that do that really push the needle for a lot of people are charity donations. So, when people are donating to charity, and this is another big misconception I see a lot actually. It's like, hey, I donate to the charity. Maybe they donate like $5,000, and that's a nice little chunk of change, right? But unfortunately, if that's the only thing you did, it's just a good deed. That's it. Because you're not going to get over any of these standard deduction amounts in order for that to really impact you on your taxes. You would have to deduct if you were, again, single. You have to deduct at least 16, sorry, you have to contribute at least $16,000 or $15,751 for it to even make an impact. And then at that point, you just spent 15,751 just to get $1 more of a deduction than you would have just standard, right? Now, if that's just what you want to do and you're, contributing to charity because that's the purpose, then by all means, live your life. But if you're doing it as a tax strategy, it only makes sense when combined with other things, or you have other ways to get over that standard deduction amount. Another thing that you can do, which usually adds up, is your state and local taxes, specifically if you're in states that are like in California, where I'm at, New York, those places where, state and local taxes can really, get up there. Previously, this was capped up to $10,000, but recently with the big beautiful bill that just came out, this got raised to 40,000. So this is actually a really good place and to see a rise. So some people who weren't taking itemized deductions before might end up be able to do it now in those particular states because of that, because it got raised. So I would say just even if it's something you haven't done in the past, start thinking about it now because you might qualify for it and it might make sense for you now. Um, and then mortgage interest, real estate taxes. So owning a home was usually the way to really get into itemized deduction territory. And so that's still true to this day. So if you have mortgage interest and real estate taxes, you can also get that. And then unreimbursed medical expenses. So if you spent $10,000 in medical expenses that were not reimbursed, then you would, be able to use that. There are certain limitations as well for this in accordance with like your AGI, but it's important to to note that that's another factor. So all those things together, you'd be able to choose, does your itemized actually get over your standard or not? Okay. All right, so another quick recap is just going from gross profit, subtract your business expenses, you got your net earnings. Your net earnings minus your above the line deduction equals your AGI, your adjusted gross income. Adjusted gross income minus your below the line deductions gets you your actual taxable income. And we have a progressive taxable income, a progressive tax system. So what that means is you get taxed in certain brackets and buckets. And a misconception is that for every dollar more you make, that you enter this new tax bracket and all your income is then subject to that tax. That's not the case. If you made $20,000 and was a single person, your first $11,925 would be subject to 10% tax rate. However, the remaining amount over and above 11,925, so the remaining like 8,075 dollars, that would be subject to 12% tax. So it's not that the full 20 is now subject to 12. It's only the amount over and above within this band that's going to be taxed, at that amount. So obviously, if you are 50K in taxable income, then you get to that 22% tax bracket. But again, only, the amount over 48,475 is going to be taxed at the 22%. So that's the progressive tax system that you'll see. And these are the rates for 2025.
So just a quick question there. So, because I know sometimes small business owners, they'll like try to maybe, maybe they're making a big, they're, maybe buying something for their business or
Mhm.
whatever at the end of the year to drop them down to the next
Yep.
tax bracket. So you're saying kind of, if I heard that right, you're saying the misconception is really that they think that when they do that, it means all of their income gets taxed at a different rate, but that's not necessarily how it works because what they thought they were trying to do to drive themselves into another tax bracket might not add up if they're spending $5,000 just to go $1,000 below that tax bracket. Is that kind of how that works?
It's kind of how it works. And so there could be some benefit for them to do that to get into the lower tax bracket. But again, yeah, it only would be the amount of income that, so like if you're in the 24% tax bracket, you're paying 5,000 to get under 103. Then yeah, the amount of money that you spent wouldn't be that 5,000 wouldn't be subject at 24% because you dropped it down. But the other tax, other amounts up to that, you still would be taxed. So it is a good thing because you're reducing your taxable income regardless. It's just not, it's not like, okay, instead of all my income being taxed at 24%, now there's only going to be taxed at 22%. That's not the case. It's a progressive thing. So your all your income was never going to be taxed at 22 or 24%.
Oh,
It's
that's
going to
good to
be
know.
is only going to be taxed depending on the bucket, depending on how much of that portion of the money was in that bucket.
Oh, okay.
Yeah. All right. So one thing about Lily specifically is that, a lot of clients that I have an issue of actually putting money aside and saving. And so Lily allows you, on the platform allows you to actually save that money. So they have a tax bucket. So as money comes in, you can literally say, hey, I want 20% to go to my tax saving bucket. So when you get $1,000 in, it'll automatically route $200 into that bucket so that you have that money out of sight, out of mind, and you can use it to pay your tax, your estimated taxes throughout the year. You still have to actually pay it. You still have to actually go to the website and pay that money, but at least it puts it separate out into a different account so that you don't touch it. It is one of my favorite features that Libby does. Okay, and so we talked about state income tax. Again, it's based on what state you live in. So, for example, Florida doesn't have an income tax, Texas doesn't have an income tax, but California and New York they do, and they also are taxed differently, different rates. Some states do a flat rate, some states do a progressive rate. So you need to look at what your state does, and you can go onto the Small Business Association website to see how you're taxed in your state. But it's important that, again, this is an additional tax more than just the federal income tax that we talked about. In
Oh
addition,
yeah, let's talk about franchise taxes because I
yeah.
wondered why my CPA did not pay my franchise taxes, and maybe you can talk about that one a little bit. That was a surprise.
Yeah, again, that's like I said at the beginning, it's just like I think a lot of times clients think that like your CPA or your tax preparer is just handling all of your tax situation, and it's not the case. They are more like, especially during this time, unless you're actually paying them to do it, and engaging them in that service. But more times than not, they're just filing your income taxes, not your franchise tax. It's a totally separate process, totally separate fee. Some states don't have a fee, some states do. Some are based off of how much revenue you make, some are based off your net worth, some are just a flat fee. And so again, go to your state's franchise board or whatever it like the Secretary of State to understand how like what your actual state tax franchise tax liability is. And then that's again a separate process, separate due date, separate deadline, and bring it up to your accountant, your CPA, your tax preparer, whoever you're doing it, or if you're doing it yourself, to make sure that you are doing this, and also filing your statement of information. So updating your information with the state is important too, because you'll start getting dinged on that as well if that's not updated. hmm Sales tax again, depending on where you sell to, where you have a what they call a nexus in, where you're selling to, where you're selling from. These are all really important. How much you're selling in the particular state, and again, you have to register with each individual state to pay their sales taxes, depending on if you have that nexus and that responsibility to do it. But again, separate tax, separate deadlines, separate amounts, separate everything. And that, something again that your CPA or the tax preparer accountant is not necessarily going to do unless you specifically engage them for that service. All right. So moving into important things that you can actually do a deadline. An extension on the deadline. And if you have an LLC, here's the deadlines this year. So April 15th is for a single member LLC. If you have a multi-member LLC, this is actually a different deadline, which is March 16th this year. Same for an S-Corp. But a C-Corp, you also have until the, April 15th deadline. You can request to do an extension. It's an automatic extension as long as you request it. There's a separate form. You can see the forms listed here, and they'll get you 6 months, 6 months and additional time to file. It does not give you extra time to pay. If you actually owe something at April 15th, that is when it is due. You do not get an extension on the payment. You only get an extension to file. It's very important because if you can do the extension and not get penalties for failing to file, but you still will get interest and everything that would accrue if you don't pay it. And that was the LLC, and then important updates here. I don't know if Jeff, you wanted to do this, or I can do it.
Yeah, go ahead. I'll let you run with it. You're the
Hey.
tax guy.
Yeah, so I know a lot of people, from my understanding, have a lot of Wyoming LLCs, and so wanted to just take a pause here to talk about some of the things that are important for LLCs for the 2025 tax filing year. So Wyoming does not impose a state income tax on LLCs, but owners must still file and pay federal taxes based on their classification. So even though you don't actually have to pay anything, you actually still have to file. You still got to file. You also got to find your annual report. Again, that's kind of the same thing I mentioned about like a statement of information. You have to update your information as well. Like that's for your numbers. And you got to pay your actual tax fee, license fee, and then your beneficial ownership information report is another thing. Again, updating information about your business. You also have to do that as well when you have a Wyoming LLC. And honestly, this can apply to a lot of other states as well. But we wanted to just highlight, since a lot of people use Wyoming LLCs, that to specifically separately call us out. And I know we talked about LLCs before, but here's some other tax extension, deadlines. If you just had a partnership or a specific S corporation, a C corporation, sole proprietors, you can just take some moment to just see the same. It's kind of around the same dates, depending on the business, but the April 15th, March 16th date with the 6-month extension. All
All
right.
right. And here's our very last poll, everyone. We want to know, where are you in your entrepreneurial journey? Oh, we got a lot of people already that have LLCs, people that are thinking about starting a business and corporations, a really good mix there. Fantastic.
Moving on, and I'll try to breeze through these to make sure we have some time for questions. But essentially, these are just the different types of entities, and we're going to move into like what forms you can expect to see, from filing those. And so, as an LLC, what's called a pass-through entity. So you're only going to file it on your actual personal tax return, called, the Form 1040. So you'll have what's called a Schedule C, and that's where you report your income for your LLC. The 1040 ES is just, again, the form that you automatically file when you pay for your estimated tax as well throughout the year. And then, of course, also on your 1040 is your self-employment tax, liability as well. When you move into an S-Corp, things change. So when you have an S-Corp, you have a separate entity that has a separate tax return. That's 1120-S. It still flows down to you. It's still a pass-through entity. And you'll get that information via a Schedule K1. So the profit of the business is determined on 1120-S, and then it's passed on to you via K1. And because you have to be on payroll, you also get a W-2 as well, but then you'll file all of that on your 1040. Partnerships, same thing in the sense that you have a separate tax form that you have to do, and then you'll get a K1, and obviously it's broken up between how many partners you have, so, and their share of the business. But then again, you file it all on your 1040, same way that you would do it with the with the S-Corp. In this case, though, you don't have an actual W-2, because partners don't get paid on a W-2. C Corp, again, separate tax return. It's called 1120. There's nothing that flows down to you because the C Corp is taxed at a 22% tax rate, 21% tax rate. And so that doesn't flow down to your personal, but if you get paid on as a W-2 owner, then you get that. And if you take distributions out of the company, that's what's called a dividend, you'll get taxed as part of that dividend too, separately, which is that double taxation. And then sole proprietorship, almost the exact same as an LLC. The difference between a sole proprietorship and an LLC is not about tax differences. It's solely about limiting your liability and separating that from your personal assets. And so if you don't have an LLC and you're just making a decent amount of money from the sole proprietorship, I highly encourage that you get the LLC because it helps you limit that liability. And then there's also allows you to start taking advantage of some other tax, planning strategies such as filing as for an S-Corp and things like that.
Yeah, and we put a link to the QR code up here if anybody wants to go to the our YouTube channel. We go kind of deep on, do I need an LLC? What kind of business structure makes sense? So scan the QR code if you want to check out some of our content. We've got a ton up there that's educational as well, that's supplementary.
Yeah. And then with Lily, if you have Lily, they actually have a system where you can pre-fill your tax form if you have all your information in within Lily. And it's really helpful, gives you a great start on, executing your taxes. Doesn't actually file it for you. It just pre-fills the form so that you can take it if you're filing for yourself. You can use that as a guide when you're filing your taxes. Or you can provide this to your, tax professional to do it for you. And so next steps with, if you're looking for help, what are questions to ask to find the right accountant, things like that is always about seeking referrals, using online resources, consider their expertise and credentials. Feel free to interview them. Feel free to ask them questions and understand fees. And that both platforms allow you to actually have an accountant CPA come in and like access your documents, access your forms. So if you have a standing tax professional or CPA, it's really great and helps with like the whole tax onboarding or the organizer process. So it's really, really great feature to have.
All right. Now that Kendale has shared everything about staying organized and kind of thinking about your taxes and being proactive, I think it's a really good time to just to briefly come back to Lily, especially the more you talked about the solution and carving out your taxes each quarter. Sounds pretty good to me. So, yeah, we want to kind of talk a little bit about the from kind of formation to filing. This is what we mean by the business success platform. We handle the formation and compliance side of things, and you can see here how Lily complements that with the financial tools that you need kind of from day to day. We've done some insights, and but we're going to talk a little bit more about like the visibility in your cash flow, staying organized. And I thought we could share a little bit about how you can go from formation to building wealth. And this is one of the reasons why we chose Lily as a partner, is to make it really, really easy to open your bank account, and be able to keep your finances organized. Make sure you're not piercing that corporate veil and keeping your business and personal finances separate. And with that, Kendale, maybe you could just kind of walk us through the platform here.
Yeah, and so with the platform, again, is at the core of it is a banking solution that allows you to basically have like a one platform for all of your small business needs, right? So you can see off to the side the different types of drop downs and different dashboards that you have available. We can go a little bit into again just the business banking at the core. Again, banking. You have the zero deposit minimum, Visa debit cards that get you, cash back when you're using it, business credit access, FDIC insurance up to 3 million, which is not the norm for, a lot of other accounts, a lot of customer support. We can move on into seeing some other features, the accounting software and contributions there, the smart bookkeeping by Lily AI. So if you only use Lily bank accounts, and then you have a feature where you can bring in your credit cards and stuff too. It can be your one-stop shop as well to like do your accounting and your bookkeeping at the minimum. So you don't necessarily need other platforms if everything exists within the Lily ecosystem. You can attach receipts and to your expenses. You can send out invoices and make payments. So it's really, really, great, as well as you can see your P&L and cash flow reports. Um, it within Lily, you like actually doing your deductions is pretty easy. You can literally just swipe left or right. If it was a personal, if it was a business expense, clearly you should only be doing business expenses in this account if you're using your business one. But that's just again important that you can be able to decipher those different things. They would recommend what account that should go into and suggest which one you should, go into. So it's like really, really easy. It learns and automatically categorizes things as well. Again, we talked about the different ways of how they can help you with taxes, why, automatic tax savings buckets, pre-file forms and sorting those transactions into tax categories. So it's easy to bring it over into the tax prep system. And then the business build program, which is really great. I have a lot of clients and people I know who just are always talking about how can I build my business, credit. And so they have a secure credit card that you can use to start your business credit, and then also work with DMB to see where your rate, like your credit score is at, what you need to do to build it more, real-time alerts, credit training tips, resources, more things like this to help you build that and build a better business as well. Oh, Jeff, this is for you.
Yeah, if you've already formed an entity with us, this part is really, really easy because you don't need to go to a bank branch or wait around for help and travel back and forth. If you've got some of your key documentation, guilty in my past, you can just log into your portal, choose create a bank account, complete the setup online. You don't have to leave the comfort of your own couch, and you may qualify for a $300 bonus. And I think that getting access to these tools, especially for me, will really help keep you organized, especially when it comes to your finances and managing and being able to work with your CPA on a solution. And if you don't have an entity yet, we've got you covered as promised. If you scan the QR code or visit llcattorney.com and you use the code launch40, you will get 40% off of your LLC or corporation formation. So, again, we'll send out the recording. We're going to open it up for some QA here, but you can also scan the QR code. And yeah, if it looks like a bunch of you are thinking about starting your business or maybe even creating another business, here's a coupon code, and then you can get right in and start working on the business banking side of things. All right, let's open it up for some Q&A. Thanks everybody for sticking with us. If you haven't already, feel free to drop your questions in the chat now. If we don't get to everything live, don't worry. We'll follow up with you by email and make sure you get your questions answered. It sounds like we're giving out free tax advice anyway, right, Kendale? And so you can rewatch it, watch it, share it later. And if you want one-on-one help with formations, just give us a call, email us. You can reach out to our business success advisors. They're always available. And here you'll see a QR code on the slide where you can subscribe to Kendale's newsletter. It's an awesome way to get like tax tips and practical insights like you heard from him today. And then, of course, our QR code for the YouTube channel. We've got nearly 100 videos covering formation and compliance topics. So, all right, Kendale, let's jump into our first question here.
Okay. Just going down the list. So for a foreign-owned single-member U.S. LLC with no U.S. income and no U.S. business, what exactly must be filed with the IRS each year? Do you have a sample/dummy example of a correctly filed 5472, blah, blah, blah? Yeah, this is a very nuanced question for foreign-owned people. So yeah, like you already know that the 5472 are things that are needed. So you still need to file to make sure that you say that, hey, because if you did business in the US, that you need to let them know. But I would say for any foreign questions, because we didn't really cover that, and I don't want to, that's a whole separate conversation. So I'm going to say, if you want to, we can talk about that directly. Oh, there's a lot of foreign. Okay, next question is, when working with foreign currency accounts, how should I account for currency losses? I record the USD value of each inbound and the outbound at the transaction date using Fed expense rate. However, the year-end USD total of all transfers is not reconciled. So again, I would have to see your 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 actual calculation. But for this particular question, foreign currency, that trade loss from exchange rates is a loss, is an effective loss that you would just calculate and take as part of um your deduction.
Deductions.
Yeah, sorry, I'm like also just trying to close them out as I answer. So again, that's another thing. Any foreign specific stuff, since we didn't really talk about that, I think that's a total separate conversation that I'm happy to answer. But with the time, I just want to make sure I get to as many of these questions as possible for the content we talked about. And again, on the screen, you see the QR code that I have access. That's how you can ask more questions, stuff like that. If we don't get to it and you got to run. All right. What if your LLC made neither profit nor loss as it had no financial activity just yet? You should still file your tax return. Again, it just gives you that extra year in business and extra year of like actual operations. So you should always file it. Again, this is not a it doesn't hurt you. It might not help you per se, but because there's no loss, but it's still something you need to do just to get you that history. All right. So does that also apply if you have a normal job while maintaining a steady engagement? I think this is a question related to that I was talking about earlier about filing regardless. So if you have a normal job, filing with the loss is really great because that directly offsets your income from your job that did take out money. And that's usually where people see refunds from, is when they have a loss from their business that then offsets their income from their job, and then you can see, hey, I already paid out X amount of dollars, but I didn't need to because of this loss, and that's where you get that refund. So it's even more important if you have an LLC, sorry, with an actual job, because you'll get that as well, a refund.
An LLC is also an actual job.
Yeah, exactly. They say it says normal job with quotes in it.
Yes.
Um, but it's a business, it's your
It
thing.
is a
So, okay, my
business. That's right.
company, LLC foreign, does not have any movements yet. Again, let's talk about foreign stuff separately.
Sounds like
All
a
right.
good topic for our next webinar
I
here
know.
is
I was
some of the
like, this
foreign
is,
stuff. This is fantastic. This is
yeah.
we'll take that as a note right now.
Yeah, and that's actually one of the first times I got a lot of these foreign questions. I actually deal with quite a few foreign, businesses. So I definitely have the answer. It's just a lot of other stuff. So another non-US person. So I'm gonna just skip that just to make sure. I'm sorry. Is 25K training class a startup business deduction? If it's a training class, it's before you actually started operating your business. Yes, that is considered a startup cost. And that 25K, you wouldn't be able to get the full amount in that first year. You only get the additional 5K of it, and then you would then amortize that, over a period of time.
So if
All
you're
right.
getting some specialized training, let's say you want to go to massage therapy school or something, as I make something up here, you can
Mhm.
write off some of that training that's specific to starting your business up to
Correct.
$5,000. Oh, wow.
Correct. Yeah, because if you're not actually executing the business and you're still training, you haven't actually done anything, it's like the IRS is basically saying like, hey, we ain't about to just give you all these costs and expenses when you haven't even done anything to make money yet. And so that's their mindset. So we'll give you only a portion of it. Yeah. Is it true home office deduction risky as IRS considers this expense as a red flag? Is it worth claiming the home office deduction? I mean, it's not risky if it's true. If it's true and you have things to support it, it's no, it's definitely, and it's definitely worth it because you spend quite a bit of money to upkeep your home. And if you do have an exclusively used space in your business in your home, then you should definitely take credit for that deduction.
Kendale, are you more likely, I guess, to get audited? That would be a question that I might think if you are taking a deduction as a home office, that might be
Not
where risky comes in at it, or not necessarily you don't get
not
flagged for that.
necessarily because it's also like that's I mean obviously the more complicated a tax return is, the more likely it could be subject to an audit. But it's also I think more importantly it's about the value of your tax return or your tax amount, right? Because if you're doing a home office deduction, but you're under 50K a year, like in net income and everything, it's just like, is it worth it on the IRS's side to focus on that? Like
Okay.
there's still some things that you like. Obviously, you can be subject to it, randomized and everything like that. But when they're looking at what to audit, they're looking at obviously the resources that they're putting in and what they're going to get out of it. So as long as you, and again, at the end of the day, as long as it's correct, you're good. Even if you do get an audit, it's correct. So here's the information, here's your paperwork, and you can go through. I know people just don't want to raise suspicion. But again, as long as it's right, you want to get every dollar you can.
You got a few other international questions in there, but here's one. Again, we've got quite a few foreign here. We're gonna have to do this. We're gonna have to do this again here because it looks like we've got quite a few in here.
Yeah, exactly. Yeah, the next question was something.
I have an office. If I have an office, I pay rent, part of my P&L. Can I also deduct the office space in my home that I also use?
Yes. So your home, your office outside of your house, you get the full 100% of that, and then the home office that you have at home, you also would get that too. Now the caveat, let me just be very clear, is again it has to be ordinarily used for business. So if you have a home office at home but you never use it because you're always at your office at the thing, then it begs the question, is that actually something you actually use in your business? Now, if you work 4 hours at the main office because you got a team there and then you do the rest of your work at home, then that's different. So it depends on your situation, but yes, you should be able to do that with the right circumstances being understood. Um, All right, how are companies that do not generate revenue from you? Okay. All right. Yeah, I've got to, okay. Oh, you're pinning it. Thank you. I'm just going to actually look for your pins. I'm just going to go down and look for your pins then.
Right there.
If we get a car as a gift from a
Pending.
parent, what is the amount that we calculate the depreciation deduction from? The value of the car. Whatever the value of the car at the time that you receive the gift, that's when you would calculate the depreciation from. So at that date, that would be the cost of the value that you would use for your business. If you're a consultant hired as a 1099, if you're using your personal vehicle for business, could you use yes, you could use the percentage method of deduction if you use your personal vehicle for business. You would just have to determine how much of that is business versus personal. Next question is, when is a 1099 NEC not required? I work with foreign contractors who bill. Okay, I'd like to understand whether 1099. So if you are working, I can answer this one very quickly. If you're working with international foreign individuals, you don't have to provide them 1099s, but you do have to collect a W-8 from them and just have it on file that that you have that, but you don't actually file 1099 for foreign contractors. Are the expenses from one quarter applied to the next quarter throughout the year? Are the expenses from one quarter applied to the next quarter? So I'm assuming this is the estimated tax type of question. So basically, when you get to when you end your first quarter of the year, you determine what your net earnings will be, and you pay an estimated tax based off of, what you think for the full year is going to be, and then you update that every quarter. So it's a process to determine, that piece. Okay. Do above the line deductions also apply if you are operating a business while having separate full-time employment? Yeah, your above the line deductions, you get that regardless. You don't have to have a business to get the above the line deduction. That's just subject that anybody can get that if you have those specific deductions that apply to you. That's not business specific. What are deductions if you are a foreigner? Okay, sorry, I'm gonna just keep going. Hello, please. I actually have a dormant company from January 2025. I'm not a U.S. resident. I plan to. Man, yeah, you definitely need to do a whole separate thing because I just think that I didn't give you enough information in this thing to really answer your foreign questions. And that, yeah, that is a totally separate thing. Those are different forms and everything. And yeah, I just don't want you predicated off of this
Yeah,
particular.
we'll compile all this, and it sounds like we've got the topic for our next webinar here, Kendale.
Yes, yes, we do. Okay, so I'm gonna skip that. I do life coaching. Didn't renew my LLC because it's just me for the business. How do I file? Self-employed. So yes, I'm just confused. As okay, so I would say renew your LLC if you didn't actually shut it down. You should want to do that. But if you just shut down your LLC, then yeah, you would just file as a sole proprietor at that point. But if you are renewing your LLC, then you would file your LLC as on your Schedule C. Same way, it's literally the same process. Again, the LLC versus the um, a sole proprietor is solely about liability.
Yeah, and if you have an LLC in Wyoming, you can always reinstate your company within a certain period of time. So I can't remember if it's 2 or 5 years, 2 years, I think. So you still have an opportunity to reinstate your company. So if you didn't form your company with us, you have to reinstate with whoever you formed your company with. If you did form your company with us, we can talk to you, reach out to our customer success team. We can reinstate you, and especially if you don't want to lose your business name, that's another good reason just to keep your LLC in good standing, even if you maybe got a slow start or didn't quite take off right when you're ready for it to. You might want to keep that name for when you're ready to kind of dive back into it again. So just something to keep in mind there.
Yep. And the next question was if the Wyoming Attorney LLC is my agent, will they file that beneficiary form? So a registered agent is more in the sense that they're just collecting your mail for you. But I'm sure that there's a service that you can pay for that they can also file your beneficiary form, like your yearly form.
Yeah, we have a lot of documents online. Reach out to the customer success team and they can walk you through that. But we have a bunch of documents online that can help you with a lot of that stuff.
Okay, should I register DBA in North Carolina for all three DBAs I'm operating under my C-Corp? Should I be filing taxes in Wyoming? Should I create corporations that are using DBAs? Are there any benefits of that and my husband? It's a lot of questions.
Yeah, that's a
Um,
lot of questions.
I would say your situation sounds very specific. So my general advice, but also I would say, if you have these questions, let's talk, is I'll start from the bottom. Adding your husband or any spouse to a business can make sense if it's structured properly and are actually doing something for the business. But that's just something to discuss. Should I create corporations instead of using DBAs? That is just a matter of like what you're actually doing in those entities. If it's all the same thing, like yeah, that just depends on what you're doing. And should I pay taxes in Wyoming where my business is formed? Um, Again, it just depends on how much work that you're actually doing in Wyoming.
Yeah, and again, you can call one of our business success advisors. I think they can answer every single one of these questions for you. So give us a holler on that one.
Yep. All right. Next is multi-member LLC, and just stop me, Jeff, because I'll keep going. If y'all
Yeah,
want me
let's
to.
take a couple more questions and then we can always reach back out to you with the answers. We'll compile all of them and we'll either point you to Kendale, or if we think that this is better to do another webinar, we'll get one on the books for sure. So don't worry about that at all. We'll get that taken care of.
Yep. Okay. So then next one is multi-member LLC, Texas a partnership. However, there's been no financial activity. So basically another question about should I file the form? Again, I always think you should file the form regardless, just to let them know like, hey, this is zero. I had nothing to tax here. Um, does Lily replace QuickBooks? Not necessarily. QuickBooks does a lot of other things. Again, Lily is that one platform for your business finances for sure, but it only makes sense if you do every single thing in Lily. So if you have multiple bank accounts with other places, then you only need bookkeeping, and like to look at that again, QuickBooks, it just depends on what you're using it for.
Yeah, and we ran a little long, but what I would say there is when we kind of, at least some of the ways that I've seen it when we were going over that content, Kendale, is that if you haven't quite hired a CPA yet and you want to at least start getting your books in order, You've started your business, especially we've seen some of these questions, tracking your expenses and not piercing the corporate veil, making sure that you're separating personal and business expenses, that you've got a way to track it, that you're developing credit, then this is a really great way to kind of start launching. And then as you mature, then you might add QuickBooks once you've started really, your business is building, you're adding employees, you'll use these as supplementary, and then as you grow, you're adding a CPA into your account to help you start really getting organized and making sure that you're staying compliant. So there's a lot of tools in Lili, and I believe it's kind of a great way to kind of get this thing launched and making sure that you stay compliant along the way. Certainly from an expense report and invoicing perspective, I wish I would have had that when I very first launched my first business 10 years ago. That's for sure.
Yes.
Okay, maybe one more question, Kendale, from the group.
Okay.
And again, if we didn't answer your questions, we'll have someone reach out to you on our end with regards to I think for the foreign taxes. I think the best way for us to handle that is let's get another webinar in the books, and we'll make sure that you're invited, and Kendale can review some of these questions, and we can make sure we're really prepared to go really deep into foreign formations.
Okay, so all right, the last one, I just skipped a few of them because I feel like I answered them. Does it make sense to ask a CPA on how aggressive they are with filing? Some seem
That
to
is a
be
great
very
question to end up with, by the way.
some seem to be very conservative, obviously want to work within the law, but there's also creativity involved. So I would say that
How many times
I,
have you gotten this question, Kendale, just out
I
of
actually,
curiosity?
yeah, I've actually gotten this question quite a bit.
I bet.
Because I don't think it's about necessarily creativity, because creativity means you're making things up. It's about strategy at the end of the day, right? Because the IRS literally gives you the information and ways to reduce your taxes. It's a whole thing. It's like they are created the code and created deductions and credits to incentivize you to do certain things. And so they literally give you the playbook, and it's just about how to be strategic, not creative. Creative kind of goes to a different route, so just be intentional about the word that you're using. But I think that it's absolutely a good question to ask, like, are you a strategic, are you more strategic? Because another thing that I think a lot of people don't realize is that when they're engaging a CPA or a tax preparer or anything like that, it's literally just to prepare your taxes. It's not actually tax planning. It's not actually tax strategy. It's just, here's my taxes. Here you go. Prepare them. And I think that people believe that, well, your job is to prepare and to think of how I can save more money. But if you're not actually engaging them for that service, that's isn't, you're not going to get that service. So I say that to say that I do know there's a lot of CPAs who are very, conservative and just are filing returns, and that's what they do. They don't do strategy. Totally get that. And so I don't want you to like hold them to this standard that you should be also doing this when all their job is to do is to prep. If you want more than that, you have to look at others who do that. People like me who look at it strategically. I also work within your business as well to, help you grow and help you scale more than just saving on taxes. So it just depends, like, but people do different things. And so I think that's really important. And again, it's not about creativity, it's about strategy and how to execute what strategies to employ, which ones not to. And again, literally doing it all within law. It's like you don't have to want to work within the law. You can literally do it in the law and be successful. So it's
Sounds
a
like
great
it could
question.
save you a lot of money to have somebody that's working with you on strategy, though, right?
Yes.
Because, the service that you want and the level of engagement that you want could end up really having a bigger impact. I know that my CPA, as a result of her helping me develop my tax strategies, it more than paid how much I was paying her to do that work,
Yep.
because she was applying strategies that just essentially paid for her for the fees that I paid her every month. back when I had my consulting business. So that's fantastic. That's a great question for us to end on. I know we ran a little bit late, everyone. Thank you so much, Kendale. You were awesome. I appreciate you kind of staying late with us here and trying to get through some questions. It sounds like you and I have some work to do on getting our next webinar up and going. And thanks everybody for joining us. We really do appreciate your time and attention today. And again, we'll be reaching out to you for the outstanding questions, certainly our BSAs, and we'll put together one that's specific to these tax questions around the foreign questions that we had. So thanks again, everybody. Have a great rest of your day, and we'll talk to you soon. Cheers.
Thank you.
Thank you.